some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock because it goes down?
selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business.
1942, when I bought my first stock, as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America.
So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time, because the very nature of index funds is that you are saying, I think America's business is going to do well over, or reasonably well over, a long period of time, but I don't know enough to pick the winners, and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time.
I think somebody like LeBron, and we've talked about it, but I think...
You and LeBron have talked about it?
Occasionally. I think actually if through the rest of his career and beyond in terms of earning power then, just making monthly investments in a low-cost index fund makes a lot of sense. I think that somebody in his position ought to have a significant cash reserve, and whatever makes them comfortable. And then beyond that, owning a piece of America, a diversified piece, bought over time, held for 30 or 40 years, it's bound to do well. And the income will go up over the years, and there's really nothing to worry about.
While investors were on the sidelines at the end of 2024, Warren Buffett piled into a classic internet stock that is up more than 3,000% since its IPO. And during the last few weeks of the year, trading volume on Wall Street is typically light as investors celebrate the holidays and take vacations. And the common Santa Claus rally did not happen in December 2024. But the market experienced some strong selling. However, Warren Buffett and his team of investors at the Berkshire Hathaway clearly had their fingers on the pulse of Wall Street after what was a fairly quiet year for the giant conglomerate in the buying front. Warren Buffett didn't really make many highlight purchases in the year, and I saw a lot of videos on YouTube about Warren Buffett is holding so many cash, Warren Buffett is selling almost everything and holding cash, Warren Buffett is holding more cash than what US Treasury or what Apple have. These are all the headlines that were coming on YouTube and Google in 2024 from Warren Buffett. So I thought maybe Warren Buffett is still waiting for a bigger crash. I mean, even if you're Warren Buffett, it's not very easy. It's not easy to predict a market crash. So Warren Buffett did not make any highlighting purchases in 2024. But Warren Buffett and his team piled up into a classic internet stock that is up by more than 3,000% since its initial public offering in 1998. If there's one thing Warren Buffett and Berkshire Hathaway have been good at, it is to sticking to fundamentals. It is always believed that Warren Buffett sticks to fundamentals, and especially in the stock market, the last 5 years, everything has been bullish. Everything has been priced way into the future. In a market where everyone seems to be buying artificial intelligence stocks that are trading at high multiples, Warren Buffett and Berkshire Hathaway have remained disciplined, sticking to their classic playbook of avoiding the froth and looking for value in beaten down names or buying wonderful companies at a fair price. I personally have made many mistakes in my journey of investing, but the one thing that I've learned from Warren Buffett is it does not matter if you buy a great company. It is important to buy a great company at a fair price or a below fair price. And Warren Buffett did not buy many stocks, repurchased fewer shares of Berkshire Hathaway than usual, and built up a hoard of more than $300 billion in cash, which means that Warren Buffett still thinks that today's the stock market is way overvalued. And even without making many moves this year, Warren Buffett's Berkshire Hathaway still managed to get a victory over the S&P 500 index, posting slightly better gains than the benchmark index for the year. Berkshire Hathaway also started making moves at the end of the year while the market was sliding. On numerous occasions during the final 2 weeks of the year, Berkshire Hathaway increased its stake in one of its existing positions, internet domain giant Inversign. And according to the SEC filings between December 17 and December 30, Berkshire Hathaway purchased more than 454,000 shares of Versign at an average price of $199 for a total purchase of over $90 million. Berkshire Hathaway now holds a stake of 14% in the company. However, that $2.7 billion position accounts for less than 1% of Berkshire's roughly $300 billion equity portfolio. This stock, Verisign, went public at the start of 1998, and since then the stock has gone up roughly 3,000%. And yet, the company still seems to be flying under the radar on Wall Street, as only 2 analysts cover it. Verisign has played a key role in origins and development of the internet, providing domain name registration services for .com and .net domains, among the others. At first glance, this company has a lot of attributes that Warren Buffett personally likes in a stock. It provides key maintenance and operational functions that power the internet. It is the largest domain operator in the world, managing close to 170 million .coms and .net domains, which gives it a tangible competitive moat. And Verisign is also the only domain operator to manage 2 of the main global root zone servers, providing another key advantage. And the profit margin of this company is more than 55% in the last year, suggests strong pricing power as well. And like I said before, Warren Buffett has not been buying many stocks of late. Warren Buffett has been a net seller of stocks for 8 consecutive quarters. And it can be suspected that when Berkshire Hathaway discloses the transaction it made in the Q4 of 2024, the count will only increase to 9. Warren Buffett has always sold stocks more than is bought in the 9 consecutive quarters. And there's a reason Warren Buffett is not buying many stocks. And it is the same reason why Warren Buffett ranks as the greatest investor of all time. Warren Buffett is a master stock picker because he is highly selective about the stocks he buys. Now, suppose if a company becomes famous tomorrow, Warren Buffett does not give in to the hype. Is this a good company? Am I getting it at a fair price? If it is overvalued, if Warren Buffett feels a company is overvalued, is not going to get it no matter how good a company can be. And your chances of investing success will increase if you're as picky as Warren Buffett. Don't buy any stock just because there's hype around it. Warren Buffett first determines whether he can sensibly estimate an earnings range for 5 years out or more. The operative word there is sensibly. He does not pluck numbers out of the air, but instead thoroughly reviews the company's business along with industry trends to make the best earnings estimate possible. And note that 5 years is a minimum estimation period. Warren Buffett wants to avoid investing in a business that might temporarily deliver strong earnings growth only for that growth to quickly evaporate. In the letter to Berkshire shareholders, Warren Buffett wrote that if he can't estimate the future earnings, he moves on to the next stock. And if you're as picky as Warren Buffett, it will save you a lot of time and definitely a lot of money. You don't always have to give in to the hype, buy the best AI stocks. Yes, the AI stocks might do well, but everyone thought the same about metaverse stocks and now it is basically irrelevant. So You always have to look at the bigger picture, never give in to the hype. So these are some of the ways that could really help you if you invest like Warren Buffett. Thank you so much for watching. Please subscribe and do hit the like button.